Hi, this is Peggy from WAR. So today our guest is Brice Scheschuk. I hope I said that properly, Brice, and you can correct me. Who's the managing partner at Globalive Capital. So Globalive is a very active player in the Canadian ecosystem. And Brice, maybe you can give us a few words on Globalive and make sure I pronounce your last name perfectly.
Sounds good. Thanks very much for having me, Peggy. It's always great to hang out with you, and I like this format. So very quickly, so the actual, you were close. It's Brice Scheschuk, and I won't get into the roots. It's a complicated story. We'll do that for another day. So I am the managing partner of a company called Globalive Capital, as Peggy said. And Globalive Capital is an investment company that was built out of a 20-year operating track record of my business partners, predominantly in telecom, predominantly known for the founding, building, scaling, and ultimate exit of Wind Mobile. We sold Wind 4.5 years ago, and we've spent that period of time basically building a family office principled investing platform, but with our own twist to it. And our twist is that we allocate a much more significant amount of our capital to the private asset classes. And within the private asset classes, we allocate a lot more capital than the average family office to the innovation category, which would be venture, angel, and so on. So that's our company.
Okay, thank you so much for sharing that. So let's go to the new normal in financial services. So from your perspective, what will be some of the major lasting impacts that COVID is going to have on the industry?
Yeah, look, it's a very expansive question and the right way to start. And where I would start with this is some of the obvious stuff. So what we have seen in our world, again, which touches a lot of venture, is that massive trend to digital acceleration generally. And the thing that we're looking for is, how is that digital trend translating to financial services? Okay, and it's an interesting kind of set of comments, because if I look at, we'll talk about a few factors. Okay, so I think it's a pretty known trope now, almost a stereotype, that prior to the pandemic, if we look at e-commerce, which has a very interesting influence ultimately on fintech, which we'll talk about in a second, but the market share of e-commerce in North America was growing at about a percent a year relative to the overall retail spend. So over about a 20-year period of the rise of e-commerce, it had about a 20% market share. And as we know, I think the first month of the pandemic, the market share increased from, it was actually 18 to 27% is the stat that I read. So we pulled forward a decade in one month. Okay, and you can take that analog and you can draw that across almost any industry and almost any sector. You take restaurant. Let's just pick one, a hard one. Restaurant. Physical restaurants, as we know, shut down for an extended period of time, and in fact, they're still pretty kludgy in terms of what's happened there. Well, what happened? Well, the digitization of takeout, delivery, and drive-through. And that is being done with new tech. It is being done with cloud kitchens. It is being done with a whole bunch of other, fintech related stuff around payments and so on. And you could literally pick any industry and you can say, how has it changed? And typically the change is digital disruption and transformation. And then how does that impact financial services? Okay, I am not a deep tech financial services guy, but what I can tell you is to pick one or two examples. We have an investment in a company called Flexity Financial. Flexity Financial has been doing retail point of sale financing for years. Well, what is the current trend? They've changed the name. They call it buy now, pay later, and effectively digitized it and figured out how to optimize loan vehicles and so on to fund these things. And boom, unsecured credit to the consumer is now becoming easier and easier to access, and that rises hand in hand with the rise in e-commerce. And I did a presentation at SaaS North a month ago where I interviewed Kirk Simpson, and we were talking about the trend to embedding financial services in SaaS companies. And you look at the traditional embedded payments, which has been a long trend, a decade-long trend, Stripe and the like. But now you see people embedding banking services. Both Shopify and Wave have announced that they are launching, small business bank accounts and card and so on and so forth. And literally the list goes on and on and on. So a confluence of a bunch of trends that were already happening, accelerated by digital disruption and the necessity of bringing that digital to the person whose physical opportunity and change to the industry.
So you're talking about embedded finance, which is definitely something that has been accelerating, the same way some of the trends you mentioned earlier. So one of the things that I'm interested as well is the impact you're going to see on the financial services as a whole, because more and more, like banks are being chipped at by multiple players and underneath, And not that I'm a big fan of regulations, but I'm getting a bit worried about the fact that that thing is getting wild. And how do you really manage monetary policy for a sovereign government when you have so many foreign players that are actually now playing in the financial service? So I'm not sure if you have a perspective that's a bit of a curveball, but it's something I've been thinking more and more lately. I'm like, I'm very much in the finance innovation space, but I'm getting a bit worried about this trend actually.
So very good question, very broad again. And I think, let me hit a few themes and feel free to unpack anything you want. So if we start with the top level, so we go into a pandemic and obviously a crisis the likes of which we've never seen before, they never are the same. And that first month of crazy uncertainty, unemployment increasing, people getting laid off, none of us really knowing how things are going to stabilize. And in this case, the stabilization really took the form of both fiscal and monetary stimulus. The amount of debt increase on government balance sheets as a result of basically shouldering the earnings load of the populace is unprecedented. The amount of monetary, we probably thought that monetary stimulus didn't have a lot further to go after the last crisis and how rates have sat for so long, but boom, they take another leg down. Like, it's an incredible thing. So my concern in that at a macro level is what you would expect me to say. I am not a fan of the whole modern monetary theory, the MMT world. I am not a fan of, some of the QE and some of the printing of money to satisfy, effectively buy your own debt. And I feel like the inflation risk, although we haven't really seen it in a long time, maybe I'm off consensus, but I think there is a significant risk over the next decade of a change to the inflation environment that makes us look like a different era in history. So I'll say that on the broad side. Now let's talk about financial services, okay? And your listeners will know, some of them will know the name Win Mobile. So to pull another industry example, we competed in a very highly regulated industry. In fact, it was arguably one of the most regulated because they control the ownership of the core raw material, which is spectrum. It's at you could say in financial services, to get a Schedule I banking license, and the Big Five and a few others is probably an equivalence in terms of the ownership of spectrum. So we have lots of crossover, and there's some stuff I want to talk about in there, but let's talk about kind of the notion of the big players and the innovation players and how that world looks. Okay, and here's what I look out and I say, okay, first at the highest level, there is an issue of trust at a consumer level. Okay, and in Canada, what we found in telecom, and what I firmly believe in banking as well, is that consumer trust is a higher hurdle than in particular in the US market, and I think in a lot of European markets. We have built a culture in Canada that is somewhat insular, it's foreign protected, it's oligopolistic driven, it's prudentially regulated, and it's focused a lot on stability, that kind of Canadian classic of stability. We love stability. And so what that does is it creates a higher bar to cross over from a consumer trust standpoint. Okay, that's just factually, I think, in our culture. We saw it in telecom for sure. And so what that means, if you get into kind of the nuances of that, well, you figure out as a new entrant, we'll use that term broadly here, what kind of consumer personas can you attract at reasonable unit economics and then build a business around. Okay, and when you talk about financial services, there's a lot of interesting things to talk about there. So, you know, you take, let's talk robo-advisor for a sec. You look at what Power did and Mike did with Wealthsimple, and they kind of fall in between, right? They did not do the traditional low, kind of low cost robo. They went with the multi-$100 million of equity. They built that national media campaign. In fact, it had a lot of similarities in many ways from a consumer standpoint to what we did at Wind, I felt. They had certain consumer personas that they attracted. They had the financial muscle, and they went at it a certain way. And that's obviously one way to skin it. You know, there are other ways. You pick your points that are less regulated, that people are less worried from a trust and prudential perspective, and you attack it and so on. So what I would say to you on regulatory generally is there are points of opportunity. Crises are interesting because they're hard to predict regulatory outcomes. Okay. I would say to you that, you know, you look at the last financial crisis in the US in particular, and the strongest got stronger, a few failed, and there has been points of innovation around it. You look at Canada, and you say, look, we are so steady, and the market shares of these big guys are so large and so slow to change for all those reasons, that if I'm thinking fintech in Canada, I'm thinking of finding points of entry that allow me to own a little bit of a market and then see if I can try to grow TAM in certain ways. The other thing that I'll say about regulatory, Peggy, and this is a hard battle fought learning, is you do not wait for regulators. You can go and lobby them, you can create commissions and policy groups and so on, and you can hope for change. Open banking, maybe reducing some of the licensing requirements for banking, these kinds of things. These are all important buzzwords. I would, control what you can control, fight where the fight is now. The second a regulatory change happens, if you were the creator of it, capital will flow to it. It'll get overwhelmed very quickly. So take the fight, don't wait, and just go for it.
Very, very interesting. Thank you. I never looked at it that way. It's, it's always a topic of conversation, regulations, because you would expect they're 10 years ahead, but they're actually 10 years behind, which becomes a massive challenge for entrepreneurs and even just practitioners in general. So you mentioned open banking. Obviously, that's a topic that comes almost every podcast. When we speak about regulations with obviously Canadian people, do you see any other potential regulation that might come up from COVID, or at least be accelerated? Unfortunately, open banking was not accelerated; it was actually put on the back burner. But anything on your radar that you think should happen or will happen in terms of policies, regulation?
Yeah, 100%. So before I do that answer, I just want to draw you one more analog to telecom, which I think informs the other industries. And I think it's always very useful to look at other oligopolies and think and see what's going on there. Okay, if you take telecom, first of all, it took 20-ish years for the government, through commission after commission and policy after policy, to allow new entrants to come in the way that they did. Okay, so point. It's slow. You think you might get a breakthrough here and there, and then something broader has to happen to create the regulatory dislocation, a government change, some other thing. In the case of Canada, it was the rise of the smartphone and the ridiculous comparables of our oligopoly to others, and finally a couple of other political breakthroughs. So the reasons why these regulations change and happen are so unpredictable and so difficult that's why I get very concerned about waiting for them. But look, and actually I'll draw you one other analog. The government had finally started over the last few years to reset to a more competitive telecom tone, and the pandemic has started to change the messaging. because the incumbents have said, look at how well we've performed connectivity-wise and broadband-wise and all these investments that we made because we had less competition effectively. They don't say it exactly that way, but that's what they mean. And the government is starting to change the message a little favorable towards those guys. So it's actually potentially swinging negatively. It's insane. So let's move it to financial services. So look, I do not see a lot of will to do things that the incumbents in financial services could present as somewhat destabilizing. Okay, and if you look at open banking as an example, but like I would love to see a regulation that allowed the creation of wholesale banks that could service digital and some of the neobanks and so on, that would kind of marry some deposit taking and some prudential and so on, but at a lower capital requirement, some restrictions, but would be very acutely focused on enabling digital. I just don't see it. I don't know where these kinds of things come from. I don't know what the political and regulatory dislocation will is for these. So I struggle with a lot of it. And so I'm not seeing, we talk about national securities commissions. We talk about fiduciary requirements. We talk about fee disclosures. We talk. I don't know what catalyzes this, and I think it's incremental. I think it's slow, and I think fintechs need to work around it, and they need to partner where they need to, and they need to take the moves on the assumption the environment is what it is for the first.
Mm-hmm. Yeah, and it's not so much fintech I'm worried about. It's more of a big tech. When you end up with a very large player like Amazon, who are obviously US based and who are taking more and more weight in the financial services of foreign countries. But I mean, that's a whole over podcast that we should set up. But I think that's something actually people should be a bit less embracing and thinking what are the free derivative in 10, 15 years, but that's my perspective. You mentioned obviously.
That's a very good perspective, Pepe. It's a very good perspective. Look, I wasn't even going in that direction. I was just kind of sitting in the existing financial services environment. Mm-hmm. Look, I think one of the great, I'm going to call it battles. I want to be careful with that term because it can mean a lot of different things. But one of the great societal things over the next 10 to 20 years are going to be around thinking about how far the network effects of these natural tech monopolies that have developed are going to be allowed to continue, and in what form.
Exactly.
We talk about the attention economy and Facebook, Google, YouTube, and those kinds of things, and where they're leading society. We talk about the reach of Amazon into other areas. We talk about, so many other components to this. And I think it is going to be one of the core societal, again, I'll use the term battles for now, over the next period of time.
Yeah, and I mean, you see that already in Europe, even now in the US, where they're finally, I think Europe has been questioning that coming from a tax perspective, because obviously, all these large players are dodging taxes, and unfortunately, they're using loopholes. So technically, well, they're not so much dodging taxes than using, gap in the regulatory environment or the tax code. But I think people, to your point, are finally realizing that it's getting very dangerous, the same way Facebook with the last election. And people are like, after the fact, oh my God, what's happening? I'm like, well, maybe we could have seen that coming, but anyway, that's another conversation. You talk about monetary policy, obviously the tremendous amount of sovereign debt we're seeing, potential inflation. I know you don't have a crystal ball, nor are you an economist, but do you see any things in terms of global financial stability, global financial order? Obviously, China, US, it's an interesting dynamic that will happen post-COVID.
So I'm not clear on how to think about the debt loads that have changed so dramatically in such a short period of time, and will continue to build over, I think, the foreseeable future to deal with the instability that we've seen. Okay, I see no end in sight to that. What happens when government balance sheets get to these kinds of sizes? What happens when money and QE and these kinds of things are buying their own debt? Where does that go? And so, look, I think you can try to look to analogs. So you can look to Japan and try to look at a 30, 40-year history of Japan. The issue you have whenever you look to an analog is there's always some apples to oranges, right? You look at Japan's population and the demographics there, and I think the goal of many countries would be to not replicate that and do things to, to deal around that. I actually have been thinking a lot when I look at the US and I look at what is a very volatile country right now. I look at, the debate last night, we can all, kind of say what we want to say, but the place is in not the best shape of its history, okay? And what would I say to that? I would say, I think that this is one of the greatest, and I've heard this from other people in the US that I've interacted with, we might have the greatest 20-year run ahead for Canada if we position ourselves effectively from an innovation standpoint. Yeah. I could make a strong case to you, Peggy, that for certain qualifications and skills, if a person, an applicant to Canada crosses a threshold, I would pay them to come here. And then I would enable them as much as possible within the flywheel that we've built from an innovation standpoint to build businesses or be part of teams in existing innovation businesses. And I think that we should target, 500,000 plus people per year of that caliber. I think we change the existence of this country in 20 years. So that changes. So trying to analyze, fiscal and monetary policy with a demographic swing like that versus other aging type swing, it becomes so difficult to do. But again, let's talk for a moment about other types of issues. So your comment about the world bifurcating or trifurcating into these blocks or into a more hostile and what feels like an antagonistic political environment, potentially bifurcations of tech ecosystems where you end up with Western countries and the kind of the capitalist democracies ecosystem too, probably led by China, could include a number of other countries that would fit in the China sphere. And then what does that bifurcation mean? Do we see a bigger technology arms race? How does that translate to defense? Again, you get into very difficult kind of prediction scenarios. I will say to you that I do think that there is a far bigger realization, maybe similar to what you and I just talked about around big tech. I think there's a far bigger realization around reliance on certain supply chains and technologies from certain countries that may not be as friendly to us as we would like. And I see significant change ahead as a result of that. I just struggle to predict exactly the directions it would go.
And to your point, cybersecurity is something I've been looking more and more at because a lot of these attacks are actually financed, sponsored by rogue networks, the usual group that I won't name, but everyone knows. So you're looking at that, you're like, okay, it's not you and I in our basements trying to, steal money from an ATM. It's coordinated attack to finance terrorism, to finance that type of thing. So it also needs to be a bit more looked at. I realize we're almost out of time. Do you have a few more minutes, or do you?
I do for sure. Yeah, and you know what I would say about cybersecurity, just to pick a domain that you keyed on, I literally think if I was picking investment themes, first of all, fintech as a theme, I think, is a huge industry opportunity to bring innovation to. It's been underinvested in relative to kind of the traditional software and so on. And there's so much innovation and so much great thinking happening with some of the rise of other technologies and so on. But cyber specifically, I actually think the total addressable market of cyber is almost unlimited, and it will continue to grow in ways that we can't predict, like some of these other domains. I love the theme of cyber.
Yeah. And to your point, like above and beyond financial services, whether it's your healthcare data, whether it's the fact that your Fitbit now is paying and that I can hack that, like the more mobile device, you have more points of vulnerabilities. Working from home, obviously, I'm using my own laptop. Well, what does it mean if I'm working at a large bank? So I absolutely agree. It's domain agnostic. It's in multiple areas, and it's just going to get more and more sophisticated because the people who are against the traditional established economies are smart people and they are well financed. So, you really need to put a lot of money into that. I have a question regarding competitive positioning. So we spoke obviously of the rise of e-commerce, embedded finance, all the themes that COVID has accelerated. What do you see in terms of organizations benefiting from the crisis we've seen in the financial services industry?
Yeah, I got you. Look, it's an interesting one. Here's what I would say to you. I think that there is two ways that I would look at it. If I look at the existing players in general, and in particular those who have regulatory protected oligopolies, what do we see there? We see a mad rush to digital transformation.
Mm-hmm.
Okay. And then it brings me back to my comment of trust and always thinking about the customer. Okay, so let's take a scenario. So I'm a customer of Bank of Montreal. I have been forever, and so on. And I've watched the evolution of their digital banking. I've watched the evolution of all their other digital services across their lines of business, and they keep getting better and better, and they do it in kind of a methodical manner, never as fast as a more nimble company, but it is what it is. It suits my needs. I go into a branch once a year to deposit a US dollar check because they still can't take those at ATMs, and supposedly they're fixing that, so I will never go into a branch shortly. So you take all of that and you say, well, that's a pretty comfortable digital situation. And in fact, the trust factor, which is always such a big thing in prudential financial services, you kind of couple all of that and you say the big guys are digitally have moved a lot digitally, and they will continue to do so, and they meet the trust threshold, and I don't really see a big impact. I would say I think the earns and so on are all in decent shape and have a good opportunity to continue to keep their market share and so on and so forth. Okay, it's not perfect, it can be bumpy and so on, but in general I would say that. What I would also say though is that there are significant points of opportunity for innovation. Okay, and let's think about a few of those. Guys selling to those big guys that provide a more innovative, nimble, quicker to adopt solution. All of these banks are talking, and insurance companies and so on are partnering wherever they can, building digital studios, thinking about corporate innovation and so on and so forth. And there are points of entry there to sell to them and partner with them that continue to get more and more interesting. So that's one kind of component. Another component is, again, back to, yes, there's a lot of regulation, but there are a lot of points of entry that work around it, okay? And I would take you back to the comments that we've had around fintech enabling in a bunch of other industries, if you will. So we talk about SaaS enabled, okay? Wave adding bank accounts, Shopify adding bank accounts, Shopify adding lending. Wave is going to add lending, I can almost guarantee it. And the list goes on and on and on. So taking software companies that already have these established business bases that can embed financial services in through innovative financial services, new age fintechs, and bringing those to their customers. That to me is super interesting. Mm-hmm. Another area of innovation, real estate. Okay, real estate has been a little behind. We've seen in the last 5 years now the adoption of much more software to prop tech and real estate tech and construction tech. I think there's a massive set of innovations coming to the financial side of real estate. I'll give you 2 examples. Home equity. So the act of buying a house as a youngster at these current price points is very difficult to come up with a down payment, your first point on home equity. I think there's innovation to happen there to co-buy with younger people. And then I think there's innovation to happen thereafter as home equity increases, okay? The home buying process right now, home buying and selling process is pretty cumbersome. If you own a house and you have a mortgage on it and then you want to go and buy a house, well, you've got some challenges in terms of getting approved for credit, in terms of comfort of selling and buying, and the transition period where you may not have done one or the other and you take some risk in there. I think there's a whole set of innovations coming. And in fact, a company called Properly announced a big credit facility today in Canada that basically provide a sequence of guarantees through that process using fintech and using a loan vehicle to make that much less friction full, that buying process. And so I think in every component of financial services, marrying to the kind of the traditional world or another technology domain, I think there's just unlimited amounts of opportunity ahead.
Yeah, I agree. And, you know, so it's funny, my mother is still in France. So anyway, she's selling her apartment, long story short. And the process is more cumbersome than you can imagine. There are 2 months where nothing can be done because you need to wait for the person to have their loan approved. You know, it's extremely cumbersome. But no one is questioning that. So the question is not technology. The question is that, well, we've always done it that way. You obviously have 2 months to wait, and it is what it is. So it's interesting to see this area of opportunities. Go ahead.
I will say to you that wherever there is significant friction, so you just gave an example right there. That example is very relevant to Canada as well. That is where there are points of entry. You know, a friend of mine just started a new business and he had to go set up a business bank account, and he happened to use TD, which was his personal bank. And he said, I can't believe how ridiculous the act of setting up a bank account is still for a company. And I said, look, Wave and Shopify are going to change that within the next year, such that you sign up for Shopify, let's say for you need their services, or you sign up for Wave as a small business for accounting and invoicing. They will have a payment solution in a 15-minute period, and they will have a bank account for you with a card associated with it within a day. And so find your points of friction, understand where the regulatory dislocations are and not, and go for it. That's what I say.
Yeah, I think still a lot of opportunities. And to your point, you know, we always think fintech as a competitor to the financial institutions. I think there is so much more opportunities to actually collaborate and win, a bit like this shark, Remora fish type of mentality. Because trying to compete, especially in Canada, which is a small market, and to your point, an oligopoly, trying to compete is extremely costly and extremely difficult. You need to be backed. I mean, you were talking about Wealth Simple, welcome back by Power. You need to be backed by a big player. It's not the US. It's, you know, you don't have 300 million people with 10% are unbanked. It's a very different ecosystem. So last question for you, and I let you go. So during this last 6 months almost now, did you pick up new habits? Any things that changed for you? Hopefully for the best with COVID.
Yeah, it's a great question. I'll go for two.
Okay.
So, and I'll preface it before I say the two. So the first thing I'll say is that we're a small shop, we're an investment company, and we do a lot of tech by investment, which kind of puts you into a tech mindset. So for us to work from home and go remote took us about an hour. So it was not a difficult thing. Obviously the personal change of being at home the whole time was a big one. So I'll say, the first thing I'll say is that I think I've become a better cook and a more versatile cook. So that's point number one. Okay. Point number two, first time in my life I haven't traveled this long, and I still haven't been on an airplane since COVID started. So point two. And then point three, and this is probably the most interesting, is, this is a bit philosophical. So after selling wind and getting very active in the innovation ecosystem on what I call the other side of the table as an investor, which then takes you into the world of mentoring and working with accelerators and working directly with founders as an investor and an advisor, what we realized, and we've been very big preachers of the innovation gospel in this country, as you know, what we realized is there was a lack of understanding at both a founder level as well as at a investor and advisor level of the most effective practices of mentoring and menteeing. And so that took, and we'd been thinking about this for a while. We never had time to act on it, but the pandemic catalyzed us to write a book. So I have spent an allocation of about a third of my time over the last 3.5 months in interviewing over 100 people and actually building and writing, now we're in the process of writing a book that we're notionally calling Mentoring the Innovation Economy. It's going to be free to the ecosystem. It has gone in incredible directions that you never expect when you start these projects. And so for me, that was new. I've never written something of that length in that style. And it's been extraordinarily rewarding. It's going to lead me to more book projects in the future. And it's caused me to kind of step back and think a lot more about how one can have points of impact beyond just making themselves a bit of money. Mm-hmm. And that's been a very important journey for me. And I'm hoping the next number of years will flesh that out even further. So it's been a great awakening for me.
That's amazing. So when are you, do you have a target date for the publication of a book?
I don't have a perfect date. I'm learning every step of the process. So I think we'll be done our first draft written in about 2 weeks. Oh. And then you go through this editorial process. So we are hiring an editor and going through that. And then you go actually through a digitization process. So we have 3 or 4 steps ahead, and then it'll go out to the world through predominantly digital with an Amazon print on demand option. Oh. And Peggy, I will make sure you're on the first distribution list so that you're aware of it. And I would love to be able to even come back and talk to you more about some of the learnings there.
That will be wonderful. And you're absolutely right. It was such a great opportunity to look at projects like that. And, yes. Obviously it was a terrible crisis and we are very fortunate and very privileged, but making the most of it doesn't change the situation. So that's amazing that you're doing that, and that's going to be so helpful for the ecosystem. So can't wait to read it and can't wait to have you back for more questions on the book specifically. Thank you so much for coming. It was so cool to speak with you. You're always super insightful, and it's always such a pleasure to see you. So thank you so much for your time.
Thank you, Peggy. I'm glad that you're doing stuff like this. It is so important to get this gospel out to the world around innovation in all sectors. I love the financial services focus. And, I look forward to our next chat, and stay safe. We'll talk soon. Okay.
You too. Bye, Brice. Bye.
Bye-bye.